Hey everybody, this is chapter 4 quiz access or quiz access chapter 4. We're going to actually do number 8 here. So 8 is just creating a multi-step income statement. This is a little confusing a lot of times because it's like there's just so much stuff in a multi-step income statement that it can be hard to know what they want. And then you can see all the boxes. You can see the boxes they have marked that they want you to fill in, but it can still be a little bit confusing. So the first line on any income statement is sales. So we're going to start there. Okay. Or is the revenue. So for a multi-step, it's usually a merchandising company, right? Because it has cost of goods sold. And so that's going to be our first one. So our sales here is $229,000. That's nice. It does some of the calculating for us. Then we're going to subtract out any sales discounts. And let's see, do we have sales? Yep, we have 16,600 in sales discounts. And then we're going to do also any sales returns and allowances. And the sales returns and allowances are 4,100 on mine. Your numbers will be different. All right, so that's going to give us this amount, which is called our net sales. Net sales just means sales after sales returns and sales discounts. After our net sales, we'll record our cost of goods sold, which remember is an expense, which is literally means the cost of the goods that we're selling, which, you know, seems obvious, but not always, right? 91,300 is up here, 91,300. And so my net sales minus my cost of goods sold is known as my gross profit. So my sales minus any discounts and returns and allowances minus my cost of goods sold gives me my gross profit. Sometimes that's called your profit before fixed expenses, but gross profit's the most common term. So then we're going to get down to the expense section. And so the expenses are going to be all of these kind of normal selling expenses, we'll see, which should be like our sales commission expense, our sales salaries expense, our rent expense, if it's for, let's see. Yeah, so our rent expense on the selling space. And if we have any TV advertising expense. So I'm just going to go ahead and put these in kind of in the order they're listed here. So sales, salaries, expenses, 23,400. Next we have our, well, I don't know what order they want them in. Let's see if it lets me do them in whatever order I want. So I have a TV advertising expense, which is 2,900. That's pretty cheap TV advertising. I have my rent expense on my selling space. Which is 10,700. And I have my sales commission expense, which is 12,000. I think that's it for my sales expenses. So those all add up to $49,000. And I have my general and administrative expenses. If I come up here, those will be things like office supplies, insurance expense, my depreciation expense on the office copier, and any salaries like office salaries. So that's what's going to go there. So we'll just do those office supplies, expense. And on mine, that is $740. Insurance expense. Which is 1,220. And depreciation expense on my copier, which is 490. Which is and the office salaries expense, which was 32,200. Is it 32.2? Yeah. So there are all of our general and administrative expenses. So there gives us our total general and administrative expenses. So, and then if we add up our selling expense plus our general and administrative expense, that gives us total expenses. And then this is kind of like our income before we have to pay any interest and taxes. And so sometimes you'll see it called income from operations, which is the option they give us here. On some things, you'll see it called EBIT, which is earnings before interest and taxes. So you'll see it listed that way sometimes. Here's an other revenues or gains, expenses, and losses. This would be like if we make any gains on selling assets that's not what we normally sell. So you can see here they have a gain on sale of equipment, or any like revenue or expenses on stuff that's not part of our normal things, our normal day-to-day operations. Like, so like if we have here, it looks like there was some, where'd I see it? Interest revenue. Well, this isn't a bank that makes money by loaning things out. So if they did make interest revenue, it's sort of an extraordinary or an other revenue. So we're going to have a gain on the sale of equipment, which was 6,260, and they're going to have interest revenue, which was $710. So it's going to give us, it totaled up for us. So our net income then will just be our income from operations minus our total other revenues or gains, or plus, well, sorry, I should say, so it's net income or income from operations plus any other revenues or minus any other expenses. So these are both revenues. So these are going to add to our overall income. So that's going to be 33,350 plus 6,970. 40,000. Whoops, I didn't even look at it. 40,320. Check our work, see if I made any mistakes. I did go through it kind of fast, but it looks like we got it all. So we are complete and correct. Anyway, hope that was helpful to you, and I hope you have a great week.